right, hey everybody. Let me see here. This is Jeff Ross, trying my first live stream here. I'm going to just see how this goes, and hopefully I'll get better as it goes on. It's way harder to run your own show versus just being a guest on a show. So the purpose of these is I just like to share with people what it is I'm thinking about, and how my mind works as a fund manager and as a Bitcoiner. And so I'm just going to go through what I do in a typical day, and we'll see what happens. Hopefully people will come on board eventually as I do more of these, and we can do some live questions. And then also I was hoping to interview some or have conversations with some friends who are much smarter than I am. So anyways, let's go for it. We're also being simultaneously, thanks for the good quality notes. I am going to try to share part of my screen here, and let's see, window. So you guys should be able to see now. This is my trading view screen. And here's what I go through every day. So I start out looking at what interest rates are doing. I want to see what the yield curve is doing exactly. So this is US Treasuries, and it's kind of a funky chart. So let me get rid of the Bollinger Bands here, and we'll keep this other stuff up for now. What I'm mainly concerned about, if you can see my arrow here, is what is the shape of the yield curve. So the yield curve had been inverted for quite some time, and it's now basically uninverted or mostly normal, right? So we have the 1 month, 3 month, 2 year. The 2 year is still below the 1 month and 3 month, but only by a little bit. And then we go up to the 10 and 30 year yields. So what's interesting for people who don't know, that the short end of the curve, the 1 month or so, is basically, it follows very closely what the federal funds rate is doing, and that's controlled by the Federal Reserve. So when they set their policy, the reason why that matters is because they basically set the prime rate. Now, the prime rate is important because people in the US who have variable rate debt, short-term interest rate debt. So things like credit card debt, home equity lines, small business loans are often variable rate debt, and that is controlled by what the Federal Reserve does. So the Federal Reserve recently lowered the federal funds rate a full basis point from basically 5.5% to 4.5%. That has a dramatic and immediate effect in that it lowers these variable rate loans that people have, so their cash flows get significantly better almost immediately. And I'm sorry, I feel like I'm actually can barely concentrate because I'm trying to figure out how to work this at the same time and talk about financial things. So anyways, what's been good to see is that the yield curve has normalized. A lot of people are very concerned that we're going to head into some sort of bear market or recession. But my goal is to inform you, at least, or to give you my thoughts that I don't think we are headed into a recession. In fact, I'm pretty optimistic for the coming 6 to 12 months or so. We could have some monthly issues here and there, like we did. Like actually, February has been a bit of a slow month, but I think it's just a nice place to reload again for the bull market. So my mantra as a fund manager is that all dips are for buying for certain risk assets, and especially for Bitcoin. There are other asset classes that don't do very well. In fact, if we're talking about the Treasury, like TLT is the long-term Treasury ETF product. I would say all dips are, or all rips are for shorting, right? Because I think yields are going to continue to go higher. Now, why do I think that? I think that because, and by the way, I just have to tell you people, I just cannot stand talking by myself. Like I feel like I need to be in a conversation with people. So going forward, I'm going to start inviting people. And if you guys have any questions for me, I do well with questions in general. So I can see your questions coming through. Okay, so here's how I look at it. When risk assets do their best, it's when the global M2 monetary supply is increasing, and when ISM manufacturing is doing well. Now, we've had basically a recession in ISM manufacturing, and I'm going to put this up on the screen here. There's another thing that I look at regularly. So this is actually manufacturing new orders. I'll get rid of the moving average here. And what you can see is, so the new orders, they have been negative or essentially negative, or meaning a recessionary or in a contraction since all the way back in June of 2022. They popped a little bit higher here in August of 2022, then went lower again. Then they popped higher again in January and March of 2024, then went lower again. And I think this low here in August of 2024 was actually the final bottom. And now it's surging higher, as you can see. Why do I look at new orders rather than just the ISM manufacturing numbers itself? Because new orders is a leading indicator, and the way that the great investors think is you got to go, or you need to skate where the puck is going, right? So the Wayne Gretzky quote, you need to invest to where the markets are going. So when we see this rise here, you'll notice it's very similar to way back here in 2008 during the great financial crisis, and then it boomed higher. It bottomed again in August 2012, then boomed higher, bottomed again in December 2015, then boomed higher. Huge bottom again in the COVID scare in April of 2020, boomed higher, and then we had this kind of shuffling, these multiple bottoms here from 2023 and throughout 2024. So generally what happens is risk assets follow this. If you look at it, if you have a far enough view, this looks like a sine wave, right? And so that's very important. When we see a bottom in US manufacturing, new orders and manufacturing itself, that's an encouraging sign that this is about the time where the economy is going to start firing again. Most people are generally pretty bearish still at this point. They don't believe that we are in a bull market. And so the people who start to notice these things early on tend to be rewarded as investors. So here we are, we just boomed higher. We ripped above 50 to 55. I think this bodes very well, and I don't think this is another fake out. I don't believe it's going to go much lower again, even though February might be a little bit weak when we get those numbers in March. But I think we're headed higher. I think this is heading to above 60 and possibly closer to even 70, similar to what we saw back in April of 2021. So that's what I'll be watching for. So, as a fund manager, I have biases. I want to know, should I be negatively biased or should I be positively biased? And I'm supposed to tell people to switch to the landscape orientation so it matches mine. So if you're having trouble viewing stuff, go ahead and switch your orientation. When we see US manufacturing, ISM increasing, that means that there's a tailwind behind risk assets, and it's very interesting. Most Bitcoiners wouldn't think this, but there's a huge tailwind behind Bitcoin. When PMI, when the ISM manufacturing PMI goes above 50, which it just did last month for the first time in 2.5 years, not the new orders, but the actual ISM manufacturing PMI itself. That is when basically it usually heralds the start of a new bull market. So when you couple that with, and I'm going to pull up another thing here, couple that with global M2 starting to increase. I'm using TradeView, by the way, for people who want to see. We'll see this general increase in a global PMI, and I'm going to go over to the Bitcoin chart here now. I'm going to go to the 5-year chart because I really like the 5-year chart. I'm going to put the 50-week moving average, and let's put some Bollinger Bands on here. Okay, so we had this dip here in global M2. So you'll see, I think you can see, yep, you can see my cursor. Okay, so it basically peaked at the end of September and went lower, lower, lower through, if you go all the way here, basically the end of December. So basically you could say the fourth quarter global M2 monetary supply was on a downward trend, and that puts downward pressure. It acts as a headwind for risk assets and for Bitcoin. Why did it do that? That's because the dollar jacked higher starting here, and this is what I was telling people on interviews, that when we see the dollar rip higher, what we will see concordantly is the global M2 monetary supply rip lower. One reason is because global M2 monetary supply, the way most people view it, it's actually priced in dollars. So if the dollar is gaining strength, then even if other countries are increasing their monetary supply, in dollar terms, it actually looks like it's decreasing. And then secondly, because of the strong dollar, that puts a lot of pressure on other countries who have dollar-denominated debt. I think most people listening to this probably know that already. So you do not want to have a strong dollar if you are in another country with dollar-denominated debt, because you have to exchange your relatively weak currency to pay the stronger. To get dollars, and you get relatively less dollars, and you need more of those dollars to pay your dollar-denominated debt. So you'll notice that the dollar peaked here in the week of January 13th of 2025, and then it's been on a downtrend since then. So because of that downtrend, I expect to see global M2 start to resume its uptrend. Trump has said, Scott Bessent has said, multiple people in the Trump administration have said they do not want a strong dollar. I think it's nice for negotiating with other countries at the moment, but in general, a strong dollar is kind of harmful. They call it the dollar wrecking ball for a reason. It's tough on risk assets in other countries if it gets too high. So a lower dollar, a weakening dollar, is actually a good sign for, in general, for risk assets, for emerging markets, and for Bitcoin itself. So I'll stop there and we'll go, and let me look to see if we have any questions. Range on SPYs and Bitcoin shows us good move is coming. I'm still on. Good. I think you should be long. I am too. So as a fund manager, I like to use these sort of macro signals to let me know if I should be biased bullishy or biased bearishly, and I'm very bullish right now. Here's a chart. These are all week. I really like to use weekly charts. They help me to not trade too much, but to stay in long-term trends. This yellow line here, or yellow-orange line, is the 50-week moving average. What I like to see, as long as it's above it, and it popped above it here, right back in March of 2023, the S&P 500 has basically been in a very solid uptrend since then. The Qs, or the NASDAQ stocks, are in a very similar pattern, as we'll see. Bitcoin, it's no surprise, it's in a very similar pattern as well. It turned bullish, at least according to this momentum indicator, all the way back in March of 2023. What I'm going to do in future shows is talk about things well, here, let me post this up. In future shows, I'm just going to go through what I do on a regular basis as a fund manager, and how I make my decisions of when to be invested heavily, when to be extremely bullish, when to be more cautious, and hopefully it'll be a help to some people. And then we won't always talk about finance. We can talk about lots of other things too. This is all looks like gibberish to most people, but what this really is U.S. net liquidity here. And I have this little graphic here down below for here's global M2, and for people who remember, I was Dr. Crab all the way throughout this whole section. So from way back in 2021 all the way through until June of 2024. And if you guys remember me from Twitter, I was bull crabbish here in this point because it was at the upper end and kind of tapping against the upper boundary of the global M2 monetary supply, and I said when it pokes above that, I'll officially turn bullish. I put these little cartoons so people could know. So I've been bullish basically since this time, and I used Michael Jackson's birthday as the starting point, which I think is when it really started to head higher. What isn't bullish and what still remains crabbish is U.S. net liquidity. You'll see that this is the COVID response here at the very left side of the graph. It ripped higher. They just flooded the system with liquidity. The Federal Reserve did, and there was also a huge fiscal response. And then the Federal Reserve wanted to slightly decrease liquidity, so they slowed down. They put the brakes on the economy, started withdrawing liquidity. But then you'll notice that even though the Fed has officially been doing quantitative tightening, they've been removing assets, mortgage-backed securities, and treasuries from their balance sheet. We see this sideways chop that's been going on since all the way back here in April of 2022. Still mid-range, like it tried to poke out here a little bit in 2024, but couldn't, and it's basically been flatlined here. Why does that matter? Because U.S.-based assets, like especially U.S. small cap stocks and mid cap stocks, tend to follow U.S. net liquidity. If you'll notice, for people who go back and look at charts, you can look at, in here, I'll put it on here real quick. Let's look at small cap stocks. You'll notice that they surged higher They peaked here in November of 2021, and then they've been basically chopping sideways, right? They've been catching a little bit of a bid recently, which is I think the Trump effect. But we'll see if that continues, because what I think is even more important is what is U.S. net liquidity doing. So even though the Fed is taking or letting mortgage-backed securities and treasuries roll off of their balance sheet, there are other forms. There's also the overnight reverse repo facility and the Treasury general account, which is like the checking account for the U.S. Treasury. Because of those offsetting effects, it's basically flatlined. So U.S. net liquidity has flatlined since all the way back in 2022. Until that changes, and I expect that it will start changing and it will start finally moving higher again, probably in the second half of this year, probably because I think the Fed at some point in the next 6 to 9 months will be forced to end their tightening. They won't allow treasuries to roll off of their balance sheet anymore, and they might even start doing actual QE. That's number one, and then number two, I think there's about 800 billion plus in the Treasury general account, and as that gets drawn down, that's liquidity entering back into the system, back into the markets, and that will push this U.S. net liquidity number higher. So hopefully that makes sense. Let me see here. Just want to look for some questions here. Let me go back to this for a second. So I think you guys can see me now, but I actually have no idea. So let's see, what's my outlook on miners this year from Rodrigo? Hey, Rodrigo. I assume you're talking about Bitcoin miners. You know, I was a big fan of Bitcoin miners in the last cycle, and I kind of held on to them for a little bit longer until the realization hit me. By the way, here's my dog. She likes to come in when I do live shows. She can always tell when I'm doing an interview because she comes in and sleeps in my office. Otherwise, she never comes in here. It's kind of funny. Bitcoin miners, I think, were the only legitimate alternative or Bitcoin proxy for people to own during the last bull market. And so I think they did exceptionally well because of that. I think that Bitcoin miners, and don't tell anybody if you have friends who are in the public Bitcoin mining space, it's a terrible business. It's a dog eat dog world, hugely capital intensive, right? You can have the top line miners for a phase, and then new miners come out that are better, and you have to go through and update all of your equipment. It is not a good business, and I think people are realizing that. I think it is possible that they can do really well. Like, I think if we have a strong Bitcoin bull market, then I think that Bitcoin miners will do pretty well. But I think the reason they did exceptionally well 4 years ago, 3 and 4 years ago, was because they were basically the best Bitcoin proxy to own for fund managers and for individuals. We have lots of proxies now. I would suggest that MicroStrategy is a way better Bitcoin proxy, right? Because it's basically just a straight up leveraged way to play Bitcoin. Miners are okay. There are some like Marathon who are kind of following suit with what MicroStrategy is doing, what Sailor's doing. Excuse me, it's just called Strategy now. It's Strategy. I don't care for Marathon because they mine Caspa too, and I just think it shows they're not just pure Bitcoiners. They did the same kind of nonsense back in the last cycle too. They kind of shift with each cycle, and that's not my favorite. I want to see pure Bitcoiners if I'm gonna invest in something Bitcoiny. So hopefully that makes sense. Do I agree with Preston that this is Chris? Do I agree with Preston that DOGE is doing a good job, but ultimately doesn't move the dial? It's not a risk to the corn. So great question. I was on the last mastermind with Preston and Hodl and Joe Carlasari. I think that they will not be able to hit their 2 trillion target, and I think Elon has basically said as much already that was a little too high. He's kind of shooting for the 1 trillion, but I do think they will continue to make waves, and they are going to irritate people on the left very much, and I do think they're going to do legitimate stuff. I'm a big fan of what they're doing because I don't think anybody, regardless of what side of the aisle you are on, I would say 99% of people believe that there is just a massive amount of government waste, right? And probably fraud, and just tons of excess that can be removed. And I think that's what DOGE will do. So I don't think they'll, could they hit 1 trillion, maybe 2 trillion, probably not. I wouldn't bet on that, but I do think they're going to make waves, and I'm here for it. I would love to see the federal government downsized by 90 to 99%, and even 100%. I think we could actually get away with not having a federal government. I know that's not a very popular opinion. I also think we should get rid of the IRS and get rid of federal income taxes and most things federal. A ton of people come at me when I say stuff like this, and I would say to those people, you don't understand how the world really works. If you think you need the federal government to hold your hand and to tell you how to be educated and what to eat and to build your roads and to take care of old people, that's just, and the sick and the infirmed, it's not what the federal government is for. That's only in recent decades where they have taken over those responsibilities, and I think that's net negative for humans in general. And most importantly, I don't think the federal government should be in charge of the creation and distribution and control of money, and that's the main promise of Bitcoin, is to separate money from state. So I'm a big fan of that. Let's see. Oh, great discussion. Thank you, Bitcoin. I see you. By the way, guys, I'm gonna eventually get over to Zapstream. This is my first episode. I'm floundering a lot here because I don't know what to do, so I'm working on stuff. At some point, I'm gonna stream this over on Zapstream. That's my goal, is to basically just do it all on open source technology. So let's see. Hoping Bitcoin miners start outperforming. Now that if you're starting, so yeah, they will be profitable. And to be very clear, I think they will do well. Like, I think Bitcoin miners will outperform most other stocks over the next 12 months. So if you had to own some, if you either had to own, like, say, a basket of Bitcoin miners or say the S&P 500, I definitely would pick Bitcoin miners during a Bitcoin bull market. I think they'll far outperform, but I think they will, in general, especially over time, they will over time underperform Bitcoin itself. And so if you just simply buy and hold dollar cost average into Bitcoin, I think you'll do quite well. So let me see here. I'm going to go back to sharing my screen and do just a little bit more. This is still just, my trial run. Here is my trading view again. Hopefully y'all can see it. Things that I watch. Okay, so remember, this is a weekly chart. So like a 5-year chart goes all the way back to before 2021. The VIX, in general, for the VIX, you'll notice it's on this smooth kind of down sloping. It's kind of undulating down. We had this big spike back here in August. That was during the yen carry trade unwinding, where everybody was freaking out. What I got on and told people, I said, whenever you see a VIX spike like this is a buy. Unless you're in a bad bear market, you always want to buy when you see VIX spike like this. This is just, not individual investment advice. Nothing is individual investment advice. This is for infotainment purposes only. But I get really excited when I see this kind of stuff happening, and I've learned to almost always, I look for the most volatile assets like Bitcoin, like maybe MicroStrategy and even some tech stocks, and I will be a big buyer of them when VIX spikes like this. We talked about the dollar already, and let me close down this and open up the RSI just because this is the stuff that I look at. I think the dollar has peaked already. I would be surprised if we go above 110 again, actually, for the rest of this year. And so, is there anything else I should talk about before we end? A couple things I look at too, and I don't want to bore you guys. What is oil doing? I like to look at that. I think Trump's drill baby drill is for real. So I actually expect oil prices to, at best, go sideways, and at worst, or I should say, I'm hearing myself here. Sorry, I'm trying to figure out what's going on here. Anyway, I don't know what's going on. Okay, oil. I think it'll be good for U.S. consumers because I do think the price of oil will, I'm going to change what I said. At worst, it's going to be flat, and at best, it's actually going to start to go lower and lower. That will be good for U.S. consumers, obviously, to have lower oil and gas prices. Gold, before Bitcoin, all we had was this thing called gold. Gold has been a stable store of value for millennia, and I think it will continue to do so. I think it's becoming less and less relevant in the Bitcoin age, but it's still, at least for another couple of decades or so, will still remain relevant. I'm not a gold hater, but I used to be a gold bug, and I used to own a lot of gold in my hedge fund and gold miners and silver miners. But what I realize is that everything that is good for gold is 10 or 100x good for Bitcoin, right? So why even own any gold? So long ago, I sold my gold and just bought Bitcoin, and I would recommend to other people to do the same. Any more questions? You'd be surprised. What was Tall Brian? Hey, Tall Brian, what's up? For the rest of the year, yeah, I don't think the dollar is going higher, mainly because it could in the short term, but in the kind of the medium to long term, Trump and Bessent want the dollar to actually be less strong, and they want rates to come down. Oh, I know, that's the one last thing I wanted to talk about. I think most people are going to be surprised to the upside in terms of what the U.S. economy does and what inflation do. So I think people have too low of economic growth expectations for 2025 and inflation expectations for 2025. And that will be reflected in long-term rates. So right now, the 10-year treasuries are at 2.53% yield, 30 years at 4.74 or so. If these are truly reflections of future growth and inflation expectations, I would expect both of these to head higher throughout the year. So hopefully that makes sense to you. But don't be surprised if towards the second half of 2025, we have a booming economy, we have high inflation, and we have treasury yields, long end treasury yields above 5%, maybe even approaching 6%. I think most people will be surprised by that. I don't hear hardly anybody talking about that, but I think that's actually a pretty high probability of happening. Let me get a few more questions and then I'll end here. See, Quasi says or asks, where do you see MicroStrategy if Bitcoin hits your target of 475? When do you think they will start leveraging back up with convertible bonds? So MicroStrategy, I've had a target for so for the last 2 years, my target for Bitcoin for this cycle is 475K. Oh, by the way, I know that it's wrong. The question is, how wrong is it? Who cares? It's just a target. I know that I'm wrong. What I want to be is directionally correct and get my timing generally right. So my real range as a fund manager is between 200K and $1 million. And so I pick 475. I think that's the highest probability price. What would MicroStrategy, what would it do? Again, about 2 years ago, I said my target for MicroStrategy for this cycle is $1,000 per share. It was 10,000, but then they did the stock split, so $1,000 per share. MicroStrategy has moved farther and faster than Bitcoin, so I actually think it's more likely that MicroStrategy, or it's called Strategy now, Strategy will peak first. And then there'll be a delayed response in Bitcoin itself, and Bitcoin will peak later, somewhere around that 475K target. So if it gets too far above $1,000 per share, which would still be like what, a triple from here? Yeah, even more than a triple. That would be awesome, right? But we'll see. We'll see what happens. So again, I like to recommend people to just simply buy and hold Bitcoin, right? Just dollar cost average. These are all just degen trading thoughts that I have as a fund manager. GameStop. So yeah, you asked about GameStop. Will they possibly invest in Bitcoin? Is that the question? Yeah, rumors GameStop is considering investing in Bitcoin. I don't know anything about it. They probably will, and they should. I think all businesses should invest in Bitcoin, just like I think all people should own Bitcoin and live on a Bitcoin standard. I think that all businesses, public and private, and all governments should get on a Bitcoin standard, and I fully believe that. And even our enemies will do that, and it'll make some of us mad. But Bitcoin is for enemies, and so that. What do you do? Guys, I'm going to stop here just because this is like my trial run. We'll see how it goes. If you guys have any questions for me, if you're on YouTube, write questions in below, and when I get the feeling and feel the vibe, I'll answer those questions the next time I do a live stream. Hopefully you guys like this. If not, tell me what I could do better. And that's about it. So thanks for showing up for my first ever live stream. And sorry it was so funky and terrible, but I'll try to get better as we go. All right? Okay, take it easy, everybody. End session.